Welcome to today's Meet the Funder session, where you'll learn more about the Enterprising Communities Fund. The session will be delivered by Matt Dickinson from GMCVO. Over to you, Matt.
Yeah, cheers, Hayley. Thank you. Yeah, hello, everyone. Big welcome to today's session on our new and exciting social investment fund, the Enterprising Communities Fund. And just before we go into that, we're going to run through a little bit about what social investment is as well, because we recognise that some people might be coming from right at the beginning, wondering what it is, how it works, who it's for. So we're going to be covering all that today as well. And just to kind of give you a bit more of background of who I am and where I'm from. So as Hayley mentioned, my name is Matt Dickinson. I'm an investment officer at GMCVO. And a bit of background on GMCVO. So GMCVO has been around since 1975 and historically was kind of the infrastructure organisation for the VCSE sector in Greater Manchester. But because of the really good work and more localised CVSs, such as Action Together, Bolton CVS, Salford CVS, GMCVO has kind of repositioned itself as an organisation committed to promoting economic and social inclusion within Greater Manchester. And within that agenda, obviously we promote social business and social enterprise. And within that agenda, we offer social investment, and that is the team that I work on. And as I mentioned, I'm an investment officer, so I work on developing cases all the way from inquiry through to taking them through to panel. So that's a little bit of background on me. And yeah, as Hayley mentioned, if you've got any questions, please do put them in the chat. And I've left quite a bit of a chunk at the end of the presentation for a Q&A, just because I realise that everyone's situation is different. You might want to ask questions that are relevant to your situation and see where social investment comes in there. So the presentation should take around 40 to 45 minutes. And then, yeah, as I've said, just leaving some time at the end for a Q&A. So quick overview of what we're going to go through today. As I said, going right from the beginning. So looking at what is social investment, how does it work, who it's for, what are the opportunities through social investment. And then off the back of that, looking at the new fund, so the Enterprising Communities Fund, looking at kind of the thinking behind it, and also some of the fund terms and yeah, just who the fund is designed for as well. And then here at GMCVO, we've kind of started to develop a little bit of a menu of social investment opportunities. So I'm going to go through very briefly what the other opportunities are, just in case there might be of some interest to you guys. And then I'm going to talk a little bit about the application process as well, and what the application process entails, and what we like to see in an application. And just the kind of the timeline that you might experience if you're looking to move forward with this. And then, as I mentioned, a little bit of a Q&A at the end, so you can ask all the questions that you like. But just to start, a bit of audience participation early on a Tuesday morning. So if you would kindly go to slido.com and type in this code. So we've got 2193139. And what I'm trying to do here is trying to gauge the room's knowledge and understanding of social investment and see kind of where people are in terms of what they understand social investment is, and more particularly what it can do for their organisation. And I've kind of designed the presentation on the back of the fact that I think a lot of people might have a partial or no understanding of what social investment is, which, you know, would be quite beneficial because we can just cover all bases from that point of view. So yeah, if you would log on, give us your answers. As you can see, it's completely anonymous, by the way, so don't worry about your name popping up or anything like that. So yeah, we've got a few coming through. Just give you a minute to answer those. Okay, a lot of people saying they've got a partial understanding of what social investment is, and to be honest, that would be my guess coming into this this session. You know, you might have heard about it, you might have heard of other organisations utilising it, but at the end of the day, you know, there's lots of gaps in knowledge, and you know, what can it do, who is it for, etc. Which you know, it is good because we're gonna cover all that today. Okay, wonderful. We've had 12 people. I don't want to spend too long on this, so I'm just going to move on. But that's really good for me just to get an idea of, you know, where the room is at in terms of understanding. So that's perfect. Okay, so what is social investment? And when we're looking at this, I think that it's best to compartmentalize it into the social and into the investment. So when we're looking at the social side of what we do, primarily we're looking at investing in organizations who have a key social purpose and that their social mission is embedded into what they do. Now, I know this is a meet the funder through an infrastructure organization who work with VCSE sector organizations. So I think with regards to your social mission, and when we certainly speak to people off the back of inquiries, this is usually quite obvious, and organizations usually can, you know, tell us their social mission pretty easily. But again, it's key that that is embedded. I'd say it's one of the two main pillars with regards to social investment and what the offer is. And equal to that, your operations in some way should be generating social impact. Now, the way that we look at social impact, the way that we analyze social impact can be quite I guess varied amongst organizations, you know, depending on what you want to track and what your outcomes are. But ultimately, we want to see that impact being generated, not only, you know, when you approach us as an organization for investment potentially, but more impact being generated as a result of that investment as well. And obviously, we'd only invest in what we understand as not-for-profit organizations. Now, when I say not-for-profit, I don't mean that, you know, you're an organization just generating a profit. What we refer to here is organizations generating a profit, and that profit, for example, going out to shareholders or directors. What we like to see is that money going back into the company, or the majority of your surpluses of profit going back into the company, and having those legal assurances as well that is going to do so. And we do look at things like profit redistribution clauses, asset locks, directors' remuneration clauses. But again, I could probably spend an hour on that in itself, and the legal elements of what we see in terms of our eligibility. So I'm kind of not going to focus on this too much, but that is something that we do look at. And the social aspect of social investment from a process point of view is that it's a person-led approach. Now, if you go to most commercial lenders, if you go to a bank and you apply for a business loan, you will fill out some forms. They might ask for some extra information, but ultimately you get a yes or a no decision by a computer or by a calculation or an algorithm. Most social investors, at the application stage anyway, will have a completely person-led approach. So for example, at GMCVO, if you inquired, you might get myself or another member of staff working on your investment application, all the way from inquiry to when it is being assessed to the panel. And of course, that decision then is decided by a panel. It's not decided by a computer or a particular calculation. It's decided people with real lived experience in the sector of running social enterprises and investing in social enterprises. So that is a key element of social investment as well. With regards to the investment itself, it's, you know, there's a lot of comparisons with typical investment. So it's finance used to grow an organization. And in our case, we offer unsecured loans. So again, offered in a very typical manner. You will get that money as a result of receiving the investment, and you will repay the loan back over a certain amount of time. And a lot of the social investors would be what we call not-for-profit investors. So for example, with GMCVO, any surpluses that we make goes back into the parent charity. It doesn't go out to shareholders or directors. And this will be the case with other social investors as well, that funds that are generated through these investment schemes go back into the community cause, whatever that is. And just to talk a little bit more broadly about social investment. So the reason it exists really is because, as I mentioned, organisations who might have a social purpose, they might have those assurances from a legal point of view around profit redistribution or asset locks. They would typically find it harder to get more lucrative finance through commercial lenders than, let's say, a for-profit company. So with that in mind, and also with in mind the fact that if you're a social organisation and you might have a diverse range of income, so you might have grant income as well, that particular income stream, for example, with grants, might be restricted. It might not be used to grow your organisation or to develop your organisation. So when it comes to this question of growth, what instruments, what things are out there for social businesses to really grow? And I guess social investment tries to do that, and it tries to do that in a way which offers finance in a really accessible way to organisations who might not typically have great finance options from more typical avenues. And who is it for? As I've mentioned, it's for what I would characterise as social businesses. Now, these are typically social enterprises or CICs. But if you have some sort of trading income of any kind, if you're a trading charity, even if you're a private limited company, but you've got certain legal assurances within your legal structure, as long as you've got that social purpose and you can evidence that, and you've got some sort of trading income, social investment is most likely, available to you. With regards to what it can do, it's first and foremost focused on growing your organisation. So whether that's through existing products or services, whether that's through new products or services, whether that's through taking on a building or refurbishing a building, as long as you're, the aim primarily is to grow your organisation, make your organisation more sustainable. That is, again, the really broad ultimate aim of what investment tries to do. So just to give you a very quick example, a hypothetical example that I've kind of come up with. So let's say there's an organization who they deliver high quality computer science and IT education to children from deprived areas, right? And they operate in this way by securing contracts from schools, but they also have an income stream whereby they deliver classes to adults that they charge at a market rate, and the surplus from those classes goes to the programs they do with the children. And they've just got a new contract. So let's say that they were originally based in Rochdale, but now they're expanding to Greater Manchester. They've just got this new contract for 3 years, and they realize that they need to take on new staff and they need to take on new technology in order to meet the demand of the work. And, they've looked at the reserves, they've looked at the current income, and they've decided that the most sustainable way in order to grow what they're doing is to take on some form of investment. And that's a very general overview. And there's, a lot more details usually in an investment application in between that. But the broad sense of, okay, you've got an organization who've got a social purpose, they're already trading, they want to grow, they're going to use investment to, first of all, grow what they're doing and grow their impact off the back of that. And, we've had investment funds open since 2017. And we've had a whole host of organizations who have really benefited from this. And we've had a fund which, as I mentioned, opened in 2017, but had closed in February 2022, called Access to Growth. And we had about 70 small and, I guess, what you could term micro organizations in Greater Manchester who benefited from investment and grew off the back of that. And if you're an organization who has never done this before, if you're not familiar with investment and taking on debt seems like a very big risk for you, but you still think this might be of some interest, what I would recommend is that, we can put you in touch with people who have taken on investment before. You can speak to similar organizations who have been on this journey and, maybe get more assurances around obviously there is risk involved, but there's a lot of reward as well if you do this right, and the ability to grow your impact and deliver more broadly on your mission as well. And I think these slides will be sent round after the call. So there's some really good links here to get an idea of the type of organizations that we invest in. And yeah, as I've said, if you may be tentative about this, we're more than happy to put you in touch with people who have kind of been there and taken on investment, and who aren't the investors, and get their view on taking on investment. And that kind of brings me to, I guess, what the focus of today's session is. It's the new fund that we're about to launch, which is the Enterprising Communities Fund. Now, this comes off the back of the previous fund I've mentioned. So Access to Growth closed in early February 2022, and that was open to all organisations in Greater Manchester. And since then, we've not had a social investment programme which has been open to all organisations in Greater Manchester. We've had a particular programme which has been open to organisations in 4 boroughs, Oldham being one of them. So some of you might have come across it. It's called Proper Good. But as a social investor in Greater Manchester, I think it's obviously important that we have an offer to every single organisation in Greater Manchester. So that was kind of the thinking behind this fund. And we're at the point now where we're kind of at the soft launch stage. So we there's some contractual developments that are going on behind the scenes, but we expect to fully launch very soon. But in the meantime, we are developing applications and we are gauging interest for this. And hopefully we should have our first applications going to panel very soon. But in very broad terms, it's a 4.1 million. Again, this is the biggest pot we've ever dealt with, which is very exciting. It's a growth stage social investment fund. And I guess the important detail to mention at this point is around it being a growth stage social investment fund. So the organisations we're really looking to work with on this, and looking to work with, developing investment applications on, are organisations who are already trading. They've got their model, kind of, or an idea of the model, and they're good at what they're doing, but they want to grow their activities even further. And it's important to mention at this stage that it wouldn't be right for startup organisations, just because the position of the funding, and because it's unsecured, we would need more assurances around that model being tested and proven. But if you are at a startup stage, we still like to talk to you and make introductions, because there are things out there for you guys that we can kind of put you on to. And with this fund in particular, one of the exciting elements about it is the funders that we're working with. And in particular, we're working with, as you can see, the Greater Manchester Credit Union Consortium. And the exciting thing about that is that part of their contribution to the funding, of course, will originate in Greater Manchester. It'll get spent in Greater Manchester, and the proceeds will come back to a Greater Manchester organisation. So that whole circular economy idea is really kind of actualised and in play here. And my understanding, and again, I could be wrong on this, but my understanding is that it's the first of its kind in terms of using credit unions involved in social investment funds. So really innovative in itself. And off the back of that, we've actually got someone on the call from the credit unions, and I can't see everyone. So Christine, are you around, Christine? Or is it Amanda? Are you taking over?
Yeah, it's under Amanda Wilcott, but actually it's Christine.
There we go. That's why I'm getting confused. Christine, yeah.
It's something to do with the log on, sorry.
Yeah, there you go. So Christine's from Manchester Credit Union, and has been a part of developing this fund with us. And Christine's just going to speak for a few minutes a little bit about what the credit unions do, and yeah, just some more information and background on who they are and what they do. So over to you, Christine.
Okay, thank you. Thanks, Matt. So I'm Christine Moore. I'm the CEO of Manchester Credit Union. We've been going for about 30 years. And we're part of the Greater Manchester Consortium of Credit Unions. So there is actually a credit union covering every part of GM. And the hope is that, you know, we will be able to fund some of these social investments. Generally, I'm assuming everybody knows what a credit union is to start with. So we're locally based financial cooperative owned by our members. We're not for profit, although we do have to make a surplus to, you know, to carry on the business and to give our members a dividend back. But one of the things that's happened over the COVID period is that credit unions have got a lot of money to lend out because people weren't borrowing the same during the COVID period. So we have, between us in GM, we've got, you know, millions of pounds, you know, that we would like to lend out. We don't normally lend out to businesses generally, you know, most of our lending is personal lending, it's unsecured, but we do have the ability to lend to corporate members. So in the past, we might have just lent to an individual to start a new business, but so this is a completely different step to us. And, you know, all the credit unions are really keen to get involved in this because it will, as Matt said, you know, it's lending money, local money off local people to local organisations, you know, keeping that money in the local economy. So we actually, Manchester Credit Union actually covers 6 of the Greater Manchester boroughs, and we do overlap some of the credit unions. And it might be that we only lend to people in the areas where nobody else lends. For example, Rochdale, there's no other credit union in Rochdale. We cover Rochdale, we cover the whole of Manchester, we cover Trafford, Stockport, and Bury. Yeah, so it's likely that we will only be lending in Bury, Rochdale and Trafford and Manchester. The only difference that might be is each credit union, depending on the size, has a limit to how much they can lend out. So if there's a big loan in an area where that credit union can't do such a big loan, we might get involved in that as well, because but only in the areas that we cover. So, you know, so we're really keen to be involved in this because, you know, credit unions are rooted in our communities, and it would be great to be able to lend to social enterprises and organisations like us that are kind of helping their communities and keeping it local. Obviously, we don't have any shareholders apart from our members. And yeah. So we're really keen. I don't know if anybody's got any questions, sorry.
No, again, it might be a good time to do questions now, with anything credit union related. So if anyone's, I can't see the chat, by the way, so there might be things popping up in the chat, but yeah, I'll just give it a few seconds just in case anyone wants to unmute themselves and ask any questions.
Doesn't look like anybody's got any questions, Matt. There was just one question in the chat, but it wasn't relating to the credit union. It was just, please could you make it clear that this is not grants being available, but it's a loan. I just wanted to make you aware of that one.
Yeah, okay, yeah. Well, the next slide we'll go on to the terms and we'll clearly differentiate that. But okay, we'll move on. Thanks, Christine. That's it's really useful. And if you've got any questions about credit unions for Christine in particular, again, we've got that section at the end where we're going to do a bit of a Q&A. So if anything comes to mind, you can ask any questions there. So
can I just ask, I can't actually see your screen, Matt. Are we supposed to be able to see your screen?
Yeah, is my screen not? I hope people have been able to see the screen. Is it showing?
I can see it. Oh, everybody else can.
Yeah,
all right.
Might just be your screen, Christine.
Right. It doesn't matter. It's okay.
Do you want to try and go out and come back in, Christine? I'll let you back in.
Okay. Yeah. Thank you.
No problem. Perfect. So yeah, again, it was a good question that Hayley raised there from someone who put it in the chat around, you know, clarifying whether it's grant or investment, not investment, but a loan finance, and it is primarily a loan, and obviously repayable. But with social investment, and you'll find this a lot, there is grant blended into it. Now, as a piece of social investment, that is where it gets really attractive to anyone who's wanting to, you know, potentially utilize this. Again, you're not going to find grants blended into loans anywhere other than the social investment funders. So with the new fund in particular, these are unsecured loans between £20,000 and £100,000. Again, we don't take any security for our loans. So, you know, if you're thinking about risk, we're never going to ask for you to put up any assets of your organization, or dare I say it, personal assets. We never ask for that to be put up as security against the loan. And as I mentioned, it's blended finance. So, for example, if you approached us and said, look, we would like, you know, we would like to draw down £50,000 as a piece of investment, you would repay back the 40,000, and then £10,000 of that would be a grant. Again, in terms of an investment offer, this is a really, really good offer compared to what's out there in the market. And with regards to interest rates and APR, for the sake of this presentation, I've put a competitive interest rate / APR. So when Christine mentioned earlier about different credit unions investing in different types of investment depending on the amount, there might be scenarios whereby a particular credit union can't fund a particular investment because the amount is too large. So in that case, we do have credit facilities with other funders that we utilize in order to make those investments. Now, the way that you would repay the loan month by month might look slightly different, whether you're going to a credit union or whether your funds are being provided by our other funders. And the important bottom line to say is that the amount you repay will be the same. Just if you're going through credit union funds, it'll be a declining balance. If you're going through the other funders, it'll be a fixed flat rate. So just to give you a little bit of context, the fixed flat rate will be an interest of 5.6%. So for comparison, if you went to a bank to try and get a commercial loan, they will probably tell you that the interest rate is going to be around 9 to 10% at the moment. And that interest rate won't change in line with, let's say, the Bank of England base rate, because all this funding is ring fenced. So it's protected from any developments there, which again kind of gives us, you know, a competitive edge, if you want to put it in those terms. The repayment schedule's over from 1 to 5 years, and we don't take any penalties for early repayments, as long as you pay up to 1 year's interest payments. From that point, you can repay early, and there's no issues with that. And we also provide an initial interest-only period up to 6 months. This is kind of at our discretion and seeing whether it works within your cash flow and whether it's needed. You know, we wouldn't offer this up front, but again, this is something we can include if needs be. So in terms of broad eligibility, these are kind of the questions that we're asking. So as I mentioned before, you know, it's all about trading income and it's all about social impact, really, in a broad sense. So are you a business or an organization that is trading for a social good? Are you working in Greater Manchester? And are you already trading and ready to grow your trading and social impact? So there's that point about it being a growth stage fund and being available to organizations who really want to grow and what they're already doing and can evidence what they're doing works and is effective. So throughout the application process, as you'll see a little bit later, there are things that we come to look at. We look at affordability, we look at specifics around social impact, but in terms of broad eligibility, this is what we would look at. And if you're answering all yes to these questions, we'd be more than happy to, to come and invite you to speak about investment and start looking at an application if that is something that you want to do. So obviously we've got Enterprising Communities Fund on the horizon, and that's going to be a really good opportunity for those organisations, as I mentioned before, who are looking to grow the trading impact throughout GM. But we do have other funding opportunities through GMCVO. So those of you in Oldham or in and around Oldham might have heard of Proper Good before. So that is a separate investment and support programme, whereby the support provided in conjunction with organisations who want to, prepare to get investment ready or to take on investment. And at the moment, we've got 2 funds that are active on that programme. So there's the early stage fund, which is investments up to £30,000, which are interest free. Again, a really good offer for those organisations who might be at the really early stage of what they're doing and wanting to take on a little bit of finance to grow what they're currently doing, but don't want to pay any interest. And then we have a buildings fund as well, that's a maximum of £350,000. You can pay up to repayments for up to 7 years. And ultimately that money can be used for either buying a building, renovating a building, or anything that relates to developing or taking on a building space. We also have got a really equally as good opportunity that we've just started to work on, called the Energy Resilience Fund. Now, we're a delivery partner on this fund, and we're working on applications on behalf of the funder, Key Fund. And what this is again, it's a very general social investment fund. Eligibility relates to the type of organisations I spoke about previously. The overall aims relates to what I spoke about previously. But this fund, it focuses specifically on energy efficiency and cost savings. So if you've got a community managed building and you either own that building or you've got a lease over 12 years and your energy costs are really high, they've risen significantly in the last 12-24 months, and you're looking to maybe do some retrofitting works on the building, put solar panels on there, put a heat pump in there, whatever you're looking to do, this fund is designed to enable you to do that. Again, it's blended finance, so portion of it would be a loan, and I believe the interest rate is 6.5%. But the really attractive thing about this fund is that the grant element can go up to 40%, if right. So again, in terms of an offer that's out there, and energy is really high on the agenda of a lot of organisations today for obvious reasons, we're not openly advertising this just because we think we might get more inquiries than we can deal with, but we are talking about it in sessions like this within our network. So again, if that sounds like an opportunity that might be relevant for your organisation, please do get in contact. And we've got other things on the horizon at GMCVO as well. So we are looking at doing a cost of living fund soon, and that also includes grant funding. So that'll be open to a wide variety of organisations at different levels of maturity. And with that, I would say kind of keep an eye on our website or our LinkedIn in order to find out a bit more about that. Should be able to find out a bit more sort of September time. But of course, the social investment market is really quite large, and we're not the only social investor that you could access. So I've left this link at the bottom, and Good Finance gives a really good directory of the social investors that are out there and their particular position in the market and what they offer in terms of the particular investment funds. So that might be a good resource for anyone who wants to look at the market a bit more broadly and kind of tally up their options that they might have. So how do I apply? As I mentioned earlier, our application process is built around being really personable. So the first step in our application process, once you submit an inquiry or send us an email, we would have a chat with you over Teams, no matter what stage you're at. We just, like to say hello, build up those networks and start to generate a conversation around investment and see whether it's right for you or not. So after that inquiry stage, we then have 2 stages of our application process. So we ask you to fill in a stage 1 form and a stage 2 form. Now, the stage 1 form is designed to gauge what we call investment readiness. And this is mainly used so that when organizations submit the stage 1, we've got a very clear view of what needs to be done in order to get them ready to take on investment. And sometimes this includes a bit more support that we can give. And we do have programs and networks whereby we can tie you into support to develop things like a business plan or a cash flow forecast or look at your finances. So that help is definitely out there if you need it and if we recognize that you need that help and support. But let's say if everything that you submit at stage 1 is absolutely fine, you then go on to stage 2, which asks you for a bit more details around social impact, around your finances. Do you have any liabilities? How does your organization work from a management point of view, etc.? And then once we've got all the information from stage 2 and we've gathered all the information we need to write our assessments, we then take it to a panel. And again, it's quite important to stress that all decisions are made by real people. They're not made by computers. And in the end, a lot of context is allowed with this. And it's not just algorithms looking at whether you can repay back a loan. There might be more risk being tolerated because the panel like the social impact you're generating. But equally, the panel's job is to kind of limit risk for both parties and make sure that the funds sort of overall are successful. But if you're going to take anything away from, I guess, this presentation or this session, it will be that if you are interested, whether you think about, you might apply, or whether you just want a conversation about social investment, the first step would to be have a chat with us. So my details are on the last slide at the end, but that is the main takeaway from this. And just another little thing as well. So with the new fund, Enterprise and Communities Fund, if you are a referrer and you refer an organization who draws down investment, you get a referral fee, and that is 1% of the investment's value, not with the grant included. So for example, if an organization draws down £80,000, you would get £800 as a referral fee, which is a nice little incentive for people to spread the word. So again, that's worth a mention. And we are a social investment team, but we do operate in a way which we try and provide advice and support for social businesses more generally. And every quarter we put on a round of different webinars and events, mainly relating to social investment, but the themes can be applied more broadly. So for example, in the last few weeks, we've had sessions around business planning. We've had a session looking at cash flow forecasting, which was quite practical and hands-on. And we've got these events coming up as well. So the first one I'm actually doing again. So, if I've not bored you to death, you might think about coming to that one. And that would be a really good one for organizations who are maybe relying on grant funding in particular, or relying on funding which is restricted, and that funding might not be you might not be generating that income in the long term. That grant might be disappearing, or you might not have received it. And looking at diversifying income streams off the back of that, and looking at adopting trading income as a key pillar of your organization's income to build up sustainability and to build up unrestricted fund, etc. We also have an online drop-in sessions for social enterprises. Again, this is just a very general networking meeting, but again, useful if anyone's looking to just come for a general chat with us, because our team will be on the call, and other individuals from social enterprises across Greater Manchester will be on that call as well. Then we also have social impact for social investment. And again, it is focused on social investment, but the broad themes of this, we look at theory of change, we look at tracking outcomes, evidencing your social impact. So a lot of organizations get a lot of value from that session in particular, especially those who are, really good at doing what they're doing, and maybe looking to evidence that for funders. So that can be a really useful if you're in that situation. And all future events are advertised on our LinkedIn page as well. So if you want to give us a follow and you can see what's coming up, then that might be a good idea as well. So again, I've left a little bit of time towards the end to answer any questions. Again, I can't see the chat, so there might be loads of them. But if anyone wants to unmute the mic, say hello and ask any questions, now is kind of the time to do so. So I can see Anita. Anita's got a hand up.
Yeah, hi Matt. I just have a quick question about reserves. So I'm from Family Action, and we're quite a big organisation, a national organisation, and we deliver kind of a large number of services across the country. But we'd be looking at potentially applying for social investment just for kind of one of our projects that we run in Greater Manchester that does generate trading income. But as a big organisation, we do have quite large reserves, and I just wondered how you would view that. I guess a large proportion of those reserves are restricted, but we do also have significant unrestricted reserves as well. And so I just wanted to question how that's viewed in the application process.
Definitely would not be held against you or prevent you from applying for investment. Absolutely not. For example, one of the organisations we're working with at the moment, they're one of the larger social businesses in Greater Manchester, and they do a lot of commissioned work, and they recently had a turnover of 5 million last year. So in terms of the types of organisations we work with larger organisations in the area, but we also work with the smaller organisations as well. So there is a real mix. With regards to reserves, the thing that, and again, when we tally these things up in an investment application, a lot of the times the relationship managers or the people working on the investment applications will think about is, what will the panel say? What will the panel think about this application? And with reserves in particular, if there's, they might say, well, they can, if they've got massive reserves, you can use reserves for this project. I'm not sure why you might need to use investment. But as long as there's a narrative behind that, that's usually all it takes to sort of answer that question. So again, what I would say to that is I really encourage you to, look at applying and just exploring it a bit further, and absolute reserves amount wouldn't be held against you at all.
Great, thank you.
No worries. Any more? Do we have any in the chat, Hayley?
No, there's none in the chat.
Okay, no problem.
Nasreen? You're on mute, Nasreen.
Hi, good morning. Thank you. Can you hear me, Hayley?
Yeah, can hear you.
Hi.
Yeah, can hear you.
Matt, thank you. So I'm going to ask a question which may sound stupid, but I'm here to ask a stupid
There's
question.
no stupid questions.
Yeah, good. Thank you, Matt. My kind of guy. So we're a very small organisation. We're not in the millions or the billions. We're in the hundreds. We're in the thousands. So my question is, as an organisation, we don't have something that we sell and we get money for. We don't trade anything. What we trade is our time, and in return we have a happier community, and a community who's alive predominantly. So if you're not selling a product or an item, but you're providing a service, but you don't have an income, so there's no money coming in because we're not selling anything. If there's just raffles and short events here and there. So for a business like ours, or a community interest company like ours, is investment still an option, or is it for somebody who are only having profits?
It's definitely not just for organizations only having profits, because we, a lot of the social enterprises we work with, they just aim to break even, and that is, embedded into their model. But so can I ask, with the services that you do people pay for those services or not?
No, so we provide like community services within the community. We predominantly get granting or funding from somewhere, and we provide that service for free. If anything, we ask them for a small contribution, which is not very nominal, nothing whatsoever. So we're not at that stage where we have a product and people are knocking on our door to buy it. And I think this is, I'd say, for most of the VCSE communities we kind of work within Rochdale. So I'm just kind of curious of, is this for us or not? Or I don't know.
No, it's a really good question. I think in these circumstances, it sounds like a bit of a broken record, but if you speak to us, you know, if you want to chat away from this, be more than happy to do so. But the reason why we put an emphasis on trading income is, first and foremost, it is more sustainable than grant income, and we kind of want to champion that. That's kind of a bit of a corny term, but we want to recognize that adopting trading income leads to your organization being more sustainable, and you can generate impact in the longer term. With the practicalities of taking on investment and taking on a loan, the reason, again, from that point of view, why we put an emphasis on trading income is that if an organization approached us and 100% of their income was based on donations or grants, and they were looking for investment, and the repayment term was over 3 years, for example, we wouldn't invest on that basis, just because that grant income and those donations, in theory, could literally disappear overnight. That's just the reality of it. So in terms of those dynamics, in terms of what income you have and whether investment's right for you, that would, it has to be trading income, because it's more sustainable, and it gives us assurances that you'll be able to repay the loan. And if you can't repay the loan, we've got a duty of care, obviously, to not give out loans to people who we believe might even be at a little bit of risk of not paying it. So that's what I'd say on that. But with regards to diversifying your income streams in the first place, if the plans are really solid, you can use investment to adopt trading income in the first place. So your plans can work out as, you get the investment, and the plans will have to be really robust if you've not got that trading income in the first place. But in theory, you could develop those plans, adopt the trading income through utilizing that investment. You get the surpluses based off your forecasts and what your aims with regards to what you're doing with your trading and the money you want to bring in, and then you obviously be able to repay the loan off the back of that. So that is kind of one way of looking at it. But yeah, if an organization approached us and they just had grants and donations as their income, it'd be very tricky to work towards a way which investment would be right for them, to be honest. Yeah. Any more?
Mark, should we go to...
Just a couple of things. When you talk about, there isn't any security, how do you secure the loan?
It's a good question, Mark. It's a good question. I mean, we work in a way, and our panel kind of are quite good at doing this, but our systems and processes work in a way by the decisions we make as to what investments we make. Again, there is a massive emphasis on risk, to be honest, and that is analysed a lot in that process, not only when we as investment officers and managers work on the case, but when that case goes to panel. And with regards to securing that investment, if things go wrong, and things do go wrong, being honest, there's not a lot we can do. And that is just the way our kind of programs work. But to give you a bit of context, with Access to Growth, the previous investment fund that I mentioned, we had around 70 investments. I think it was 72. 3 have had to have provisions put on those investments, which as a percentage of a portfolio which haven't succeeded, we're very happy with that percentage. And I think that's testament to how our processes and systems work at the application stage when we analyze risk. And, the panel are, if it's right, comfortable saying, you're not at the right stage to take investment, or this isn't right, or we believe there's too much risk. And by that kind of mitigates the eventuality of things going bad. Does that answer your question, Mark? Is that kind of what
to a degree? Well, yeah, it does, to be honest, because I think you're quite honest in your answer.
Yeah.
I suppose the other bit is where you talked of almost a capital investment in infrastructure or buildings. Could that be used in effect for building purchase?
Yeah, absolutely. So I mean the buildings fund in particular that I mentioned is part of a different investment fund than the one that we're focusing on today, which is a new GM wide fund. So I'm not sure where you're based, Mark, but if that building would be, I guess if you're all from that side of Greater Manchester, if the building was based in Oldham, then you could use it, the buildings fund for that. Otherwise, you could use this new fund to take on a building, but the most you can borrow through this new fund is 100k, and I'd be very surprised if you're going to find a premises you can purchase for 100k. So yeah, there's different ways we can look at it, but absolutely you can use it to purchase and take on your own building. Yeah.
Yeah, no, so I get that, but I think it would be in terms of structuring a purchase, it might be a good way of splitting the sort of if it's a lower interest rate than say a fixed rate mortgage, there might be some sort of logic to that.
Yeah.
And the other thing as well is if in terms of the adjudication, if you will. So we're not talking building, and we're talking about ideas. If just if you come with an idea of as a business proposition, then a panel, but it's like who decides if that you? I'm trying to put it into a way. If just say, for example, Elon Musk had come along and said, "I want to build electric cars," who in that panel then would be, would have that knowledge to say, actually, there is a market for electric cars, so we'll back this. Or, you know what I mean? The skill sets within that group, are they strong enough, or are they just some other third sector leaders, if you will?
Yeah, no, that's really, really good question, Mark. So with our panel, there is a wide variety of skills and experience, and most of them relate to either running a social enterprise or, investing previously through other social investment funds. But as part of our application, if we know that there's a specific area or they're working in a particular market which the panel might not be familiar with, then we try and seek out third-party verification, especially on the bigger investments for that market in particular. So we obviously have a network of whether it's previous investees or those from the VCSE sector, or just more widely, we can approach people and say, well, look, we've got this potential investment. This is what the business model is based on. Does that seem right? Is there anything that is cause for concern? How does the model make sense to you as someone who has worked in that industry? And we will pass that third party verification onto the panel and who it was and what they've said about that. And yeah, that is kind of the way we mitigate that, because it's a good question. There's a wide variety of industries and markets out there, and obviously the panel does not cover all of them. But if there's one in particular, for example, whether it's electric vehicles or just things that the panel don't have experience in, we would try and get the most knowledgeable, like the deepest understanding of whether that model is viable from someone who has worked in that industry during the application process.
Thank you.
No worries.
Matt, I think there just might be a final question just in the chat. Dawn has asked if is the buildings fund available in Rochdale, please?
No, it's not, and it's I guess it's quite frustrating sometimes for people when we start talking about proper good and they're not in one of the 4 boroughs. And the reason why it's only in 4 boroughs is because when there's a whole host of local access programs throughout the United Kingdom, and when organisations had to put a bid in for it, they needed an organisation to disperse and run the investment side, and an organisation to run the support side as well. And we were keen to do this all across Greater Manchester and run the investment side, but only 4 boroughs and 4 organisations who were willing and capable to provide the support side put a bid in, and they were in Wigan, Bolton, Oldham and Stockport. So it's not based in Rochdale. But again, the new fund that I mentioned today, Enterprising Communities Fund, is GM wide. So if if there is a way to use those funds to help you take on a property, then absolutely, we can look to do that, or use those funds for other social investment purposes. It's just that the early stage in the buildings fund that we're working on isn't available in Rochdale, I'm afraid. But again, there's other options out there for you.
Thanks, Matt. And I am aware of time, but Dawn's just mentioned, is the Energy Resilience Fund GM wide?
It is absolutely. So again, as I mentioned, if you've got a building and you've got either a long lease or you own that building and you're looking to make it more energy efficient, looking to make cost savings on that building, please do get in touch. We started to develop inquiries for that fund now. So really keen to hear from you if you kind of fit that loose eligibility, and yeah, absolutely available to all organisations in GM.
Thanks, Matt.
Perfect, wonderful. Well, I've got some kind of details here. So with any of the funds that I've mentioned today, if you think that they might be relevant to your organisation, or you just want to say hello, have a bit more of a chat about social investment, and please do email me, or if you submit an inquiry form, that comes straight through to us as well. And Hayley, are these slides being sent round? Is that?
Yeah, of course. I'm going to send the slides round, and also a link to the recording as well. Yeah,
perfect. So please feel free to get in touch and have a conversation with us. And if you're on LinkedIn, feel free to add me on LinkedIn as well, and keep up to date with all the other stuff that's going on. But yeah, that's it from me. Thanks for listening, guys. Really appreciate it. And yeah, always open for a chat if anyone would like one.
Thanks, Matt, and thank you as well. It's a really detailed and informative presentation, really helpful. And thank you all for joining as well.
Cheers, guys. Take care.
Thank you. Bye-bye.
Bye.